Hello everyone, I'm Tom with Stocks Navigator. Today I'm going to show you how to use the price chart and the volume to make a $10,000 for the day trading. As you know, last year the S&P 500 they down more than 19.4%. All the fund manager got crushed. You probably see your IR account, your 401 account, it went down at least 20-30%. They are there to tell you to long-term buy and hold. But there is no setting buy and hold. You are not Mr. Warren Buffett. He had money to hold, not you. The market is going to go up and going down. It's more volatile than before due to the inflation and political tension risk. If you keep holding your stock, even a lot of good stock like Apple, Tesla, Google, Amazon, Facebook, you can see it. They are coming down very hard. No one tell you that you can sell in the on the top and then you can swing trade up and down so that you can make more money rather than holding and see a rapid drop in the value. So when the market go up, we trade long. When the markets go down, we trade short. And it's hard for you to keep the buying stock at the dip because you are thinking it's cheap, but the chip can be cheaper. While you are waiting for the stock market to turn around, you can trade future or the short-term swing trade stock to generate daily or short-term income, which is I'm going to show you next. So stay tuned. Trading is all about the probability and manage the risk. When you enter the trade, you need to know why you are taking the trade by looking at the price chart. And you can tell if it's in an uptrend or downtrend, so you can go long or short. It's the institution trader are in line with you, any volume that support for your entry, and manage the risk means how to trail your stop loss to protect your profit. Do you know that in terms of technical analysis, when you look at the chart, the two most important things is the two that we need to do is that the price and the volume. When I'm talking about the price, I mean anything that you can see on the price chart by look at the buy zone, sell zone, trend line, support, resistance, the pattern recognition, and the nature of the right moves in the direction of the trend. And you need to know where is your entry and profit target and where to set your stop loss. When I'm talking about the volume, I mean it when you enter the trade. It's an institution, they're going along with you or just a bunch of FOMO and try to get rich quick, the type of trader without understand the market structure. So as you know that if you don't know technical analysis and you need more education, that's where Stocks Navigator will teach you the right education to fit your trading objective to be a successful trader or investor. That's why we train, mentor, and empower our students to operate 100% independently to navigate the market with the confidence. So I'm going to show you that how every day I took a trade. Before the market open, I will go through the whole process for you so that you can take a look and let's see you can make how you can make $10,000 on the day trade income. Okay, so make sure that you subscribe to my YouTube channel and hit the like button below so that I will notify you every time we have a new lesson. So now let's take a look on the chart. So this is the day trade chart that we are focused on the Stocks Navigator. As you can see here, this chart here is the E-mini S&P 500. So every day before the market open, I have to look at the chart and then I can see where the level of support resistance, where the buy zone, sell zone, so I can roll ahead of the time. So the chart here in front of you here is what they call a brick chart. Instead of using a lot of chart with a lot of noise, I'm using the brick chart. So the market, they won't move up and down if they go to a bunch of the size of the brick that we set, how many points, so they can turn from red to green. So as you can see that this is the chart, and you can see that on Thursday, January 6, 2023, okay, the day before the market came down and they went sideways and then they create a sell zone, buy zone. So they're dancing around the top, the bottom. So they create clearly the buy zone and sell zone. At the market, it's still range bound. We have to trade in the range bound until they be able to break out the buy zone and sell zone. So on Friday, before the market opened, around 5:30, 1 hour before the market opened, on the January 6, 2023, which is Friday, you can see the market is coming down. They stuck in the range bound, and then they shoot it back up after the report, economic report come out. They shoot it back up. They were able to break out the sell zone, but they hit right into the next sell zone, which is already pre-rolled from the day before. As you can see that the market shoot it back up, and then they put it back down. So they try to dancing around over here. So when they come down, they create another buy zone. So they put it back to the buy zone, and then they shoot it back up. Like half hour before the market opened, they try one more attempt, but they cannot punch through it. They go back to the sell zone, and then they put it back down. And when the market opened, they try to put it one more time to the sell zone, couldn't punch through it, and then they collapse to the downside. But when they go down, where they going to? They go to the buy zone, which is we already pre-rolled before the market opened. So the indicator that's the price. If you look at the price, you can see that when they break down the support, they're coming down to the buy zone. But I'm using another indicator, they call volume pressure. So the volume pressure, they measure the buying and selling pressure. So it will help me to see the where more buyer or the seller get into the market. As you can see here, before the market open, when the market open, they shoot it back up, but you see that the no buyer, only seller. Okay, the price go higher, they make double top, but the no volume of the buyer. You can see that everything here is just a sell volume. So that means that this move here is just a fake move. That's why you have to be careful when it hit back to the sell zone. And then when it hit to the sell zone, and 70% of the time they fell, and then they come back down. So when they come back down, where they go to, you can see that the selling value continue to drop down. All the red candle here, they tell you that all sellers, they are taken here until around 6:51 specific time. The market found a support the buy zone, and you can see that the brick here they turn to green, and then you can see the big volume it can get back in. The buyer, the buy volume pressure come back in, and then break out the downtrend line. They put it back up, and then you can see the market start moving up to the upside, and you continue to ride them up in the higher high, high low formation. And you can see that the volume, buy volume continue to push it back up, more volume put it back up, as you can see here. So you stick with the trend. So as you know that by look at a multiple time frame analysis, when the trend is start put it back up, and you can see, you watch out for the sell zone. When the market hit to the sell zone, somebody because they test this level many times, so they hit here, they push it back down one more time. But a lot of buy volume will still continue to buy through this level, so you know that they will continue to push it up to the upside until this level here. You can see that the price continue to put it up to the upside, but the buy volume pressure is getting weaker, so they diverge with the price over here. So it means that they tell you this move will be the ending, and then they need to pull back down. So after they pull back down to the support right here, and then at this moment around 10:30 and 26, and the market be able to find support, you see more buy volume pressure coming in, and then the buyer continue to put it back up to the upside. As you can see that when the market in uptrend by using multiple time frame analysis, as you can see every time the market in uptrend, you continue to buy the dip. Every time they pull back, you see this line they hold up pretty well. Every time they pull back, they put it back up to the upside. So that's how you trade until the last minute here. You can see that the buy volume pressure is ending, and then they break below the support line here, and you see a lot of sell volume pressure coming in, and then that's where you know that this is the ending of this move, and then you need to take profit. So a couple of things here, that's how you look at the price chart. in terms of the manage the risk. As you can see that when look at by using this chart, you can see very clear when it candle turn green and then it continue to hold up to the upside, and then they give you the tail here. This is when you get in here on the second green candle here, and your top lot below here, and market will put it back up, and you stick with the green side. They chop it back down, but they never get below here. So when they be able to break out this level, your top lot you can raise them up here, and then they shoot it back up. Even they pull back down, but your top lot will still hold there. When they break this level here, and you move your top lot down below here, and then they put it back up, and then they come back down, but they never attack this top lot. At the moment they take out this level here, your top lot should move up here, and then they continue to raise them up, and then your top lot will be over here. So they pull back down, and they break this level, your top lot will still stay there. But when they run it up, and then when they break this level here, they test it, the previous sell zone, they punch through it. Now they give you another level of the top lot right here. So you keep doing that, right? And then you go up here and they pull back down, but they never take this top lot. When they break this level here, your top lot move up here, but they never take this top lot. And then they break this level, your top lot is moving up to the upside here. And then you continue to stick with the green brick here until they give up at the end, until the volume pressure cut the upper support line here. That's one way to look at the chart. And on the price chart, you can see that the price move very nicely, so you can see where it's the ending point right here. That you can see where they hit to the top. So you see multiple confluence happen at the same time. So the market hit to the upper trend line here. The volume pressure, sell volume pressure happen right here. You see a lot of sell volume will come right here. And if you understand the structure, the market structure, you can see that they go moving way. This is wave 1, wave 2, wave 3, wave 4, wave 5. So that ending particular this way also. And if you understand how to use the Fibonacci, this is another thing that we are teaching in expert trader course. And you know that when the market come back down here before market open, they build a bay. So they hit to the top, they come to the bottom, they never take out this low. So the market puts it back up, and you can see that the market go right into the Fibonacci extension level. So you can see that multiple things happen at the same place, the same time. That will be the end of this move here. All right, so based on this method, and then I'll be able to capture about 11,000. Let me show you for today. Let me take a snapshot for you here. Based on this simple method, today I'll be able to capture about $11,575. So by using this simple method, as you can see that, you know, and if you stick with the trend, and you stick with the Dow theory, and then you're using a multiple tool that we are using here, so that you can make money on the day trading. So this is the method that we teaching in the Stock Navigator. If you would like to learn more about this method, you can check our website by click the link below, and then we will see. We will help you to understand how to trade and how to understand the financial market. Okay, so that's all I have for you today. So thank you very much for your watching, and I will see you on the next video. Take care, everyone.